Hello, this is Red with RedRagaleo.com. It's December 27th, 2012. The world did not end, so I don't know if you guys are disappointed or not. It really stinks if you were counting on the world to end and you wouldn't have to pay your debts, your mortgage, your electric bill no more, your water bill. Sorry to tell you, but it looks like you're still going to have to pay the gangsters for stuff that should be free, like free electricity, free water. But you're going to have to keep going on and paying your debt as a good slave until the day you actually do die and the world is still here without you for the next generation of slaves. In the meantime, we slaves actually have a chance to make some money on a bear market that is starting to happen already. We're starting to see the cracks. I actually thought that the market was going to top out in January the 4th is when I actually kind of thought it was going to top out. And the reason I thought that was because that's a ritual 11 day. Now there's still the possibility that what we're seeing here is a wave 1 down and we're going to have a wave 2 back up and then a wave 3 down on that date. So that is a possibility. So let's keep that in mind. And I'm going to go over those possibilities there. But here we're looking at the 2-hour chart right here on the ES. And this is not a fake print. This was where they actually took the market on that flash crash. I just happened to be sitting in front of the computer when that happened and watched it go down literally in 30 seconds. It hit that low of 1391.25, and then they reversed it back up. To me, that was just another attempt at Goldman Sachs to try to wipe out some people, steal their money by hitting the buy stops. And right now, it looks like they are going to take it down there and retest that low. So I don't know if that's going to be today or tomorrow. Maybe they put it in the bottom tomorrow and they go back up. The market generally moves in a 60 to 80 point range, I have noticed. So if we go up here to this top at 1445 and we make it down here to, let's say, 1390, that's pretty close. That's 55 points. And considering it's light volume and stuff, that might be all that we get. So I would think that they're probably going to go down here, maybe pierce just a little bit, just to scare some people, go a little bit past it, maybe 1390, whatever. You know, and I don't know if that print was real or not. If that's a fake one, I guess that one was 1399. So anyway, it's very possible that they could continue this thing down tomorrow. This is actually the perfect time for them to do it because of the light volume in the holiday season. It's normally bullish. It is not right now, but considering that they don't want to panic, it's better to take it down 55 points or so during this light volume when they can control it than it is to do it in January when it's going to be heavy volume. But with that said, I think there's a strong possibility that this whole big move is just a wave 1 down, and what we're going to get is a wave 2 up into January. I am thinking that we're going to do this on January the 4th because it is a ritual 11 date. There's no guarantee on that, but if you actually add up all the digits in it, and let's do that. Well, I've got a chance here, and this thing is working. Sometimes it works, sometimes it doesn't. So let's write that down. You have 0, and we need to do a different color. We need to do like red or something. So 0, 1, 0, 4, 2, 0, 1, 3. All that adds up to 0 plus 1 plus 0 plus 4 plus 2 plus 0 plus 1 plus 3. It equals 11. So that is your ritual date for the January. The next one would be the 13th. So you've got the 13th, and that happens to be on a Sunday, and then you've got the 31st. That's just too far away. I don't think it's going to be then. So my thoughts are very simple. I'm thinking this is a wave 1 down, and wherever it ends, and then we're going to chop up into a wave 2. I don't know how high we're going to go, but let's just, whatever it gets to, it gets to. I'm looking more for the 4th. That's just going to be my date to look. And we'll also look at the charts, of course, too. But with no deal in sight for this physical cliff nonsense, which is really, truly nonsense, folks, because the amount of money they're talking about is like 1% of what our debt is. It's like insane. It's like, okay, we're going to shave a penny off of $1. It's just stupid, and they're acting like it's a big amount, and it's not, compared to the trillions and trillions of dollars that we're actually in debt. So it's just a game they're playing. Even Lindsey Williams says that it's just a game that they're playing to scare people. But if this happens as I think, then what we're looking at is a nasty wave 3 in January and the rest of January. And I do think it is going to go right into Legatus. A wave 3, a 4, and a 5, if that's the case. And I think it's going to bottom out February the 7th through the to the 9th. That is the next Legatus meeting. At that point, I think they'll come out with some resolution to this physical cliff nonsense, and then you'll see a rally go up into August before we see a final collapse. So, looking at Ron Walker's charts, I like to look at his charts every now and then because he does have some good stuff. So, let me just get that off the screen here. We're going to look at his charts right here. You can clearly see he's got the 200-day moving average right here. If you actually go over here and look, you can see it right here. And it's showing 1390. Isn't that funny how that just happens to be the flash crash low? So logic tells me that we're going to go down here, we're going to tag this sucker, and then we're going to go back up. Where we're going to go back up to, I don't know. Maybe we only go back up to this this moving average right here, 1412 right now. Maybe that curls up a little bit, and that is the 50 moving average, as you can see right there. That is possible, or we could go up even higher to the 20, and that's the red one you can't hardly see. So maybe it goes up a little bit higher, and that is 1421, and then there's the 10 at 1427. So those would be your targets, also your Fibonacci retracement levels. So those are your targets that you're going to look for. But more than anything, you're going to look for time. And to me, it's really pointing to the first week or maybe the second week of January. Maybe I'm wrong on the date. I'm just guessing. Not all highs are put in on ritual 11 dates. Many times they're just other dates. I don't know what they are, but maybe it's 11th. Maybe it's January 11th. Maybe that's the case. January 11th isn't what I'd call a yearly ritual, but it is the 11 is an 11. It's a daily ritual. I call them dailies just because it's only that day of the month. That's it. It's like every month is going to have the 11th, the 22nd, and the 29th, because the 29th is 2 plus 9 equals 11. You don't add the 22 because it's a master number, or 11 because it's a master number, or 33, or 44, or 55 if you ever could get that, but you can't. But you don't add those simply because they are master numbers. But the 2 and the 9 you would add. So, and obviously the 33, if you could actually add up all the digits to equal 33, but that's not going to happen in our lifetime again. We done past those time periods. The only time you could have probably done that is when the year was 1990 something, because you'd had 2 9s, that'd been 18, and a 9 that would have been 19, and then maybe in 1999, 19 and 9 would have been 27 right off the bat then, so all you'd had to do was come up with 6. So obviously, you had that in the months. So 5/1, May the 1st, that would have been a 33. But anyway, that's just talking about in the past. Let's just focus on what we got right here. And let me clear some of this out, and then let's go back again. What I'm really thinking is going to happen again is for us to move down to here, come back up to some point right here, and then start heading down in a wave 3. Now this wave 3 should get ugly, and we very well could hit right here to 1266. I mean, right now it is getting extremely ugly. And then maybe, you know, if that's the bottom, so we could have like a wave 3 that goes to here and then like this. That could be it. So that's a wave 3, then your 4, then your 5. That could be it. Or this whole big move could be a wave 3, and then you chop up for a 4, and then you break it for a 5. We have a 1068 fake print from a month ago or something. I don't know, several months ago. It was sent to me on an iPhone that somebody took a screenshot of. It showed a high of 1419, which we hadn't had at that point, and a low of 1068. So that is possible. I mean, literally, they could just absolutely just fall off a cliff. We don't know. If we look at, let me see some of his other charts. I don't get a chance to go back to watch Ron's stuff anymore, but I like to check his charts every now and then. Clearly, you can see, you know, we've crossed the 50 line here on the RSI, so it is losing a lot of strength here on the daily chart. And then here on the transports, obviously we're losing ground. Actually, I didn't even refresh that page. And you refresh that page and you can see it's even worse than that. So yeah, it's getting quite ugly. He's marked out a possible scenario, and that looks very similar to what I'm thinking of as well. You know, back test, move down, and then a move back up, and then a collapse. And of course, this is on the Russell, but it's good to go check his stuff out every now and then. And this is the VIX. You can see it is breaking out. Everything points to a big sell-off in January, folks. We know Legatus is happening on the 7th through the 9th. That tells me where the bottom is. That tells me that is going to be the bottom of the move. I don't know where the top is going to be. We're just going to have to figure that one out ourselves. But if the way we're looking right now, we're getting pretty oversold on all these charts, and I do believe we're going to bounce off that 200-day moving average. And when we bounce off that 200-day moving average, you're just going to wait and give it some time to work its way back up. It might not be on the 4th, okay? It might go on into the 11th. So let's keep that in mind as well. So you can see right here, it's getting ready also to hit the outer edge of that Bollinger Band. I believe that's what that is. So you would think that just looking at this right here, down here at the bottom, you think you're going to curl back up a little bit at some point right here and run up and hit that 50. And that could very well take a week, 2 weeks, week to 2 weeks. I don't know how long it's going to take. There's 1, 2, 3, 4, 5, 6 days down so far. Tomorrow might be a bottom. So it'd be 7 days down and maybe 5 to 7 days back up. So that could put us into January the 4th or later. It could even be a date past that. It could be a date past that. It could be January 11th for all I know. But this is looking very eerily the same as what we had with the 2010 sell-off. So you go back here real quick. I am kind of running out of time, but I'm going to go back here as quick as I can and show you here what we had here on the 2010. Again, 2010, January right here. This was where I seen my very, very first fake print, and it was on January the 11th. Right here, I seen my first, right there, I seen the first fake print. It said 97 points down, and literally we chopped around a little bit, and we finally fell off the cliff on the 19th. I'm sorry, on the 20th. And we went down right into Legatus, February the 4th through the 6th, 2010. We bottomed right there, barely pierced the 1047 by a little point or two, and then went right back up for several months into August or May. So I think that's what we're going to have again, folks. I think we're going to bottom in Legatus, so look to get short in January, folks. See you guys. Good luck.